In 72 hours, Nvidia reports the most important earnings in semiconductor history, and three-time bombs are sitting under the number.
Wall Street is pricing in perfection on a $4 trillion company, but nobody on CNBC is asking the question that actually matters: what happens if even one of these fuses lights? Because here's the truth: Nvidia isn't just reporting a quarter. They're defending the entire bull market. The S&P 500's gains this year? Roughly 35% of them trace back to Nvidia alone. One company. One earnings call. One Jensen Huang keynote standing between euphoria and the worst tech correction since 2022. And tonight, I'm going to walk you through the three-time bombs Wall Street is too scared to touch: the China revenue ban, the Supermicro smuggling scandal, and the Blackwell ramp that's quietly slipping. Let's get into it. Time bomb number 1, China. For 3 quarters in a row, Nvidia's data center revenue from China has been a black box wrapped in a euphemism. The H20, that watered-down, export-compliant chip Nvidia built specifically for Beijing, was supposed to be the compromise. A way to keep 20 to 25% of Nvidia's data center TAM alive while satisfying Washington. Then in April, the Biden-era licensing regime tightened, and the Trump administration's Commerce Department went further. Nvidia took a $5.5 billion inventory write-down on H20 chips in Q1. $5.5 billion. That's larger than the entire annual revenue of AMD's data center business just 2 years ago. But here's what nobody is telling you: the write-down wasn't the bad news. The bad news is that China was Nvidia's fastest-growing margin segment, and Jensen has publicly admitted Huawei's Ascend 910C is now good enough to displace them inside China. If guidance this quarter shows China revenue collapsing towards zero, the entire growth narrative resets. Not slows. Resets. Now here's where it gets darker. Time bomb number 2, the Supermicro smuggling fallout. Over the past 18 months, multiple investigations, from the Wall Street Journal, from Reuters, from the Commerce Department itself, have traced billions of dollars of restricted Nvidia chips flowing into China through shell companies in Malaysia, Singapore, and the UAE. Supermicro, Nvidia's largest server integration partner, was at the center of the storm. The DOJ is now actively probing the diversion network. And here's the part Wall Street is ignoring: a chunk of Nvidia's reported data center revenue over the last 6 quarters may have been chips that were technically sold to legitimate buyers but ended up in Chinese AI labs through gray market resale. If the Commerce Department forces Nvidia to implement end-use verification, actual physical tracking of where every H100 and B200 ends up, that's not just a compliance cost. That's a structural hit to sell-through velocity. Imagine telling your top customer, yes, you can buy 10,000 GPUs, but we need to inspect the data center first. That's the world Nvidia may be walking into. Time bomb number 3, and this is the one that actually scares me: Blackwell. Jensen has called Blackwell the most successful product launch in company history. Demand is, quote, insane. But let's look at what's actually happening on the factory floor in Taiwan. TSMC's CoWoS packaging, the advanced 2.5D interposer technology Blackwell requires, has been the single biggest bottleneck in the entire AI supply chain. Reports from Taiwanese supply chain analysts at TrendForce and DigiTimes suggest CoWoS yields were running below 70% as recently as Q2. Nvidia had to redesign portions of the GB200 NVL72 rack-scale system after thermal and interconnect issues surfaced at Microsoft and Meta deployments. Some hyperscaler orders slipped from Q3 into Q4 and Q1 of next year. So when Nvidia reports, watch the data center sequential growth number like a hawk. If it's below 12% quarter over quarter, the Blackwell ramp is behind schedule. If it's above 18%, Jensen pulled off a miracle. There is no middle ground that the market will accept. Let me give you the number Wall Street is actually whispering about. Consensus for the quarter is roughly $33 billion in revenue, with whisper numbers as high as $35 billion. Data center is expected to come in around $29 billion. Gross margins, and this is critical, are expected to compress from the 75% peak down to roughly 73%, because Blackwell's initial production costs are higher than Hopper's mature node. Here's the trap. If Nvidia beats revenue but misses on gross margin, the stock sells off. If they beat both but guide cautiously on China, the stock sells off. If they beat everything and guide above the street, but Jensen says one word about digestion or air pocket on the call, the stock sells off. The asymmetric risk on this print is staggering. We are talking about a company that needs to beat by roughly 5%, raise guidance by roughly 7%, expand margins, and deliver a flawless Blackwell narrative just to hold the current multiple. Now let's zoom out, because this isn't just about one earnings report. This is about the entire architecture of American AI dominance. Nvidia's CUDA software mode 18 years of developer ecosystem lock-in is the real product. The chips are the delivery mechanism. But three forces are now actively attacking that moat simultaneously.
Inside China, Huawei and Cambricon are building CUDA alternative stacks with state backing. Inside the United States, Google's TPU v6, Amazon's Trainium 2, and Microsoft's Maya are all designed to reduce Nvidia dependency at the hyperscaler level. And inside the startup world, Cerebras, Grok, and Samba Nova are winning inference workloads on price performance. Nvidia's response has been to move up the stack, selling not just chips, but entire rack-scale systems, networking, software, and now even AI factories. The Blackwell platform isn't a GPU. It's an attempt to make the entire data center an Nvidia product. If it works, Nvidia becomes a $6 trillion company. If it stumbles, the AI capex cycle that's been propping up the entire market gets a very public reality check. Here's the geopolitical layer that almost nobody is connecting. The Taiwan question. Every Blackwell chip, every Hopper chip, every piece of advanced silicon Nvidia sells is fabricated by TSMC, and the most advanced packaging happens in two facilities in southern Taiwan. The Trump administration has openly floated tariffs on Taiwanese semiconductors. Beijing has run 3 large-scale naval exercises around the island in the past 6 months. If even a 10% tariff materializes on advanced node imports, Nvidia's gross margins compress further. If geopolitical risk premiums on Taiwan exposure get repriced by institutional investors, and there are already rumblings from major sovereign wealth funds about reducing concentration risk, Nvidia's multiple compresses regardless of how good the earnings are. This is the trade Wall Street can't model, because it requires admitting that the entire AI boom is sitting on top of one island, 100 miles from the largest authoritarian military in the world. So what should you actually watch on the call? 3 things. Number 1, the China revenue number. Not the percentage, the absolute dollar figure. If it's below 1.5 billion, the H20 strategy is dead. Number 2, Blackwell shipment commentary. Specifically, listen for whether Jensen gives unit numbers or hides behind dollar revenue. Hiding means yields are still problematic. Number 3, the gross margin guide for next quarter. If they guide below 73%, Blackwell is more expensive to produce than the market expects, and the multiple has to come down. Beyond that, watch for any mention of inventory levels at hyperscalers. Microsoft, Meta, Google, and Amazon have collectively committed over $200 billion to AI capex next year. If even one of them signals a pause, every semiconductor stock in the world reprices overnight. Nvidia's earnings aren't just Nvidia's earnings. They're the referendum on whether the AI trade is real or a bubble dressed up in CUDA libraries. Here's my honest take. Nvidia will probably beat. Jensen is the best operator in semiconductors, maybe the best CEO of his generation. But beating isn't the question. The question is whether the magnitude of the beat justifies a $4 trillion valuation in a world where China is closing the gap, Washington is tightening export controls, hyperscalers are building their own chips, and the entire supply chain runs through an island Beijing claims as its own. The 3-time bombs I walked through China, Supermicro fallout, Blackwell, any one of them can be defused. All 3 at once? That's the trade nobody on Wall Street wants to put on paper. In 72 hours, we find out which fuse is burning fastest. If you want to understand who really controls the future of AI before Wall Street does, subscribe. I break down one chip war story every week.